Alright everyone, here we are with another video with Invest for Tomorrow. To the first time viewers and investors, welcome to the channel. To all subscribers, welcome back. I'll ask for returns for you guys to smash that like button, and if it's your first time here, do not forget to hit that subscribe button and click on that notification bell so you don't miss a single video and you're up to date on our chart analysis here with 42 Vision. So here we are with the SPY doing a complete transition in a single day, right? As you can see, it went from a dip area here back on the 14th to rip area here between the 15th and today the 18th, and today on the 30-minute it went from bright green to white with red borders. We need to talk about key levels here, what's going on, what's making it go down, some of the things we've talked about in previous videos. But before we break it all down, I want to share with you guys the home run opportunities that were mentioned over at the Discord. So the home runs of the day were spectacular and beyond expectations. And if you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts with our 42 Vision indicators, check out the link down below in the description to the Discord. And by joining, you'll become part of a growing community of investors, all looking to learn and grow together. So the stocks I mentioned this morning gave jumps of 3 to 5%. 5 to 10% plus, but our home runs were from our QQQ bot and our SPY bot. And our SPY bot sent out a bear indicator since 10:15 a.m. and from that moment forward, put options went up 150% plus, and our QQQ bot sent out a bear indicator since 1:20 p.m. and from that moment forward, put options went up 100% plus within an hour, guys. If you guys want to know about these stocks early on in the pre-market and receive this edge and clarity over the charts with our 42 Vision indicators as well as our bots, check out the link down below in the description to the Discord, the 42 Vision indicators. We look forward to having you join us, and let's jump into these charts. So here we are with the SPY, and the reason why it's pulling down so fast, it has to do with a few things that I've pointed out before, especially once it starts touching the key levels that I talked about, right? We're going to look at it here together. Let me pull up the bull and bear indicators, which you can now gain access to as well. The link is down below in the description to the 42 Vision indicator, getting connected to the SPY bot, our QQQ bot, our newly released Tesla bot, and we have other bots on the way so that you can receive the clarity and edge that you deserve within the volatility of the markets to maximize on opportunities. And you can now join the members using these resources to maximize in either direction by receiving this clarity and edge over the charts. So here we are with the SPY hitting a complete transition on the 30-minute chart from the rip area to the dip area and getting that extra layer of confirmation with the bear indicator of continuation to the downside, right? It went from the 388 mark, 389 mark, all the way down to 380s, a whole $9 to the downside. So right now, the overall market is pulling downwards. Earnings season is coming up, but there's a few key things coming up, making it go down even faster. The first thing is it bounced right back up pretty fast from the 370s, and it actually tripled bottom, as you can see it here in the charts, right? And now things are coming right back down within the volatility and now under a bear indicator after a big run. In yesterday's video and the previous videos, I talked about how we've done a complete transition here from Thursday to Friday. Thursday, it was actually one of the Fed members talking about how the market was pricing in 100 basis points too fast. And then on Friday, it had to do with consumer sentiment reports. But today, why is it going down pretty fast? Well, we have different articles that are reflecting why the stock market is going to continue to have volatility. And this is my perspective and opinion alone. It's not something that is guaranteed or correct. I could be completely wrong. Just my opinion and perspective, not financial advice, but I believe volatility is here to stay. And within the volatility, there's going to be opportunities to maximize within the moves. And I'm going to continue to watch 42 Vision from the dip areas to the rip areas, and from the rip areas to the dip areas. And then also in between that, the bull and bear indicators as extra layers of confirmation. But what has made it go down so fast today? One of the main things that's popping up here is that the 10-year treasury briefly touched above 3%, okay? Very important, because when you look at it on the 15th, which was Friday, it was sitting at a dip area, consolidating down here between 292, right, 2.92, and all the way down to 2.90. Well, quickly things started to pick up today, and it went from 2.91 all the way up to 3.01. And now it's actually trying to pull back down and spiking back up towards 2.97 as I'm doing this video. If we broke above 3% and continued towards 3.1, 3.2, it was going to stir things up in the markets, because this is going to show us what the bond market is pricing in for future possible rate hikes, or what it's looking like, right? Then on top of that, we have oil prices spiking back up and breaking above, obviously, $100. I stated if we get back above 100, it's going to be very important to watch this, and 42 Vision allows us to see the dips from the rips to go ahead and chart whether it's oil, 10-year treasury, or anything, even the dollar, right? The US dollar, even the VIX, right? If you look at the VIX, it's actually starting to spike up after hitting a bottom. So all these things are correlating to what's going on quickly in the markets, right? But in the bigger picture, apart from US oil, 10-year treasury, and also hitting an overextension of the full transitions here of white with red borders to bright green, and there's an eventual reversal to happen. We just did a really quick transition just in one day. So things could actually try to bring themselves back up. Doesn't guarantee it's going to stay up. As long as this bear indicator does not get canceled out, we could continue to go into further weakness. And we're going to talk about supports and resistance. But that bear indicator, if it gets canceled out by another bull indicator, it just means further volatility and quick movements due to all these different data points, right, that I just showed you in the charts. Now let's look at these articles together. So the first one here that we talked about before is Bank of America slashes their S&P 500 target to the lowest on the street after recession forecast. And what they're seeing is basically the S&P 500 is their forecast is 3,600, citing their forecast for a recession this year and expectations that the Federal Reserve will pivot in 2023. That is what they're seeing, basically based off their reports, their analyst ratings, and so forth. Okay, that came out not just this week, not last week, but weeks ago, and it's being reiterated and re-amplified through the weeks, right? We have Jeremy Graham, which he's been warning for the S&P 500 index to go lower, and he's stating it could go lower even another 40%. And then they talk about in this article 3 shock-proof stocks against this, which there is really no stock, in my opinion, again, not financial advice, just my perspective, that can turn out to be shock-proof of any of the downturns, right? And these are 3 stocks that are in his portfolio, so that's what really stands out to me. But in the volatility, I believe there's opportunity. No matter which direction stocks are going, there's going to be opportunity every single day. That's just the way I look at it. Nothing guaranteed, not financial advice, and doesn't mean that works for everyone else. But I'm going to continue to watch 42 Vision, the bull and bear indicators, and maximize on the moves. Just like the members within the community are using the resources to maximize in either direction. Then we have here Morgan & Stanley Wilson predicts that the S&P 500 trough, right, is going to come pretty quickly, okay, quote unquote. This came out today. We can't read it, for the premium members only, right, CNBC Pro. But what matters here is that if it's going to come quickly, it's because there's going to be a shock, whether it comes from the Federal Reserve, whether it comes from oil, the US dollar, or 10-year treasury going higher really, really fast. But if it's going to come fast, we're in the midst of it. And also the earnings season could create an earnings recession. That's what everybody's talking about now, right? Quote unquote. And we've been in this bear direction, not just here on the 30-minute as it popped up today, not just here on the 1 day since way back here in April. Within this volatility, we still are under a bear indicator, but since January, on the 1 week on January 24th, and things are trying to bring themselves back up. Now, we just hit our first red bar with green borders. The last time that happened, it went ahead and went right back down to red bars and white with red borders. We need to watch this carefully. Now, the last time it happened consecutively was back here in March, and it turned out to be a fake out, and the bear indicator did not get canceled out by a bull indicator. If not, it stayed dominating. It rejected close to that area where the bear indicator popped up, and things have gone down even further for the last 4 months. And here we are right now within the volatility, trying to see what's going on. If you pull up the 1 month, you could see that we've been under a bear indicator, popped up for the first time and confirmed this month, popped up in June, confirmed this month, and right now it's trying to bounce back up from the 370s and 362 marks. So between 370 and 362 is going to be a pivotal level if we go back towards it and test it. And if we break below 362, the next level will be down here at the 320 mark and 340s to watch within those areas. Now, even though Bank of America lowered their price target to 3,600, does not mean that that's the bottom or guarantee to be the bottom, because that is just one of the lowest right now on Wall Street, and there's many others that need to revise their price targets and see if they're going to lower it or keep it the same. So right now 3,600 is the lowest on the street, but doesn't guarantee it's the lowest on the street moving forward. We need to watch and see what's going on. But the SPY right now is sitting at the 380 mark. We need to watch carefully 372, 370. If that gets broken through 362, and if this is going to have any strength to the upside, it needs to break above 393 and get towards 400 again and work its way back up towards the 420s. As always, guys, thank you guys so much for watching, and let's make some money.